Let's uh, spoke about that is just evidence or a method or a way that the directors have to account. And this information is normally made public right at the end of the financial year. So you're accounting for a specific period. Obviously, you are required as a company to show comparable information. So you need to show sales for this year and sales for last year for comparability purposes. However, the current year is the year that you account for. And the information that you are accounting for, you need to state whether it was audited or not. And it needs to be a true reflection of the financial affairs of the company. Because that's one thing that we are more interested in. Even though there is some information that will be in the financial statements that people, because when you talk about financial affairs, people expect numbers. Some financial affairs of the company are non-numeric. Um, I'm trying to come up with an example here. This is one example that I normally give my students. They, if you're running a company and you are the director of the company, and somehow you go out partying and you meet whoever at that party. I normally explain it in a form of Gossip Girl. Um, so this group of youngsters went partying at some point. So one of the girls wanted the rich boy, and the rich boy didn't want her. I forgot their names. And don't ask me how I got to watch Gossip Girl. Um, and while at that party, they got drunk and so on. But the girl took a picture of herself and the guy. Um, yeah, I would get deep into that because I'm dealing with you guys. And when she took that picture in the morning, she showed the picture to the boy and said, if you don't tell everyone that we are dating, I'm gonna lick this picture and I'm gonna say that you have sexually molested or harassed me. And because of that, what happened is that this boy's dad passed on, but had left a hotel, which is a family business, under his name. And the members of the family, the uncles and the aunts, wanted him out because of that information. So what I normally say to my kids is try not to be racist, stay away from scandals, because that information can affect the value of your company. Do you see what I'm talking about? It's non-financial at all. It's about the morality, how you carry yourself. And that could turn out to be financial. And it's non-numeric, but it can turn out to be financial. And there's a lot of information that will be reflected. Guys, when you talk about the financial statements, it's a book with a lot of information in it. It's not just your income statement and the notes and the financial statement of financial position or the statement of cash flow or the director's report or the audit report. No, there's a lot in the financial statement that is shown there. And some of the information is non-numeric, but it's highly financial. I'll talk about the Marcus use the case later on. Okay. So these accounting records, as I said, they need to be accurate and they need to be complete. And they must be reported in one of the official languages. I've never seen any financial statements reported in Sesotho. I've seen Afrikaans and English only, but it can be in any of the official languages of South Africa. Note that it is an offense for a company or any business with the intention to deceive or mislead any person to fail to keep accurate or complete accounting records. I know ESCOM is guilty of that. I know a lot of state-owned entities are guilty of that. I know municipalities are guilty of that to the extent that the members of the audit committee, which is in the auditing team, which is in charge of um, auditing state-owned entities, including municipalities, were threatened. Some were threatened. They had death threats. So this auditing thing, it's not that easy. It's quite dangerous as well, especially when you start going after powerful people that are just misleading the public and misleading all the stakeholders, misleading the shareholders, misleading customers. And in when we talk about government, they're just misleading everyone else. And they also show false information, which is and by the way, by talking about state-owned entities, and if you've watched my videos, you will know that I report on everybody, including I'm still expecting something to be done with the banks because they falsify certain information that they reported. Remember the currency manipulation case? I don't know where that ended, but that is a huge thing. And somehow it is just swept under the carpet. Um, and and Marcus Eustace did the same thing by falsifying financial statements. Now, when we falsify financial statements, what they do is to overstate income, overstate assets, understate liabilities, understate expenses. That's what they do. Some will actually overstate expenses so that they pay lesser tax. Because when you overstate expenses, your income becomes low and you have a lesser tax and you still have a lot of retained income that you can distribute to the shareholders. So at some point, the directors and the shareholders do collude. However, note that the Companies Act is there to protect all the stakeholders, including the shareholders more than anybody. Because what Marcus Eustace did with Steinhoff, he betrayed people that lost the most are the shareholders. But I feel like they were stupid as well. When you watch Steinheist, you will understand what I mean. You can't trust anybody with your money and not make them account and just trust them with the money. Because I'm thinking billionaires are smart, but clearly they're not. Um, it is an offense for a company to falsify a company's financial accounting records. Now, when we talk about financial statements, every time I mention the issue of financial statement and I ask my students to tell me which financial statements do you guys know, they will normally say, oh, it is the statement of profit or loss, i.e. the income statement. It is the statement of financial position. Remember, the income statement shows you about the income and expenses, okay? Profit or loss. It's about income and expenses. If your income is higher than expenses, it's profit. If expenses are higher than your income, it's a loss. Okay, we call it the statement of financial performance. And then there's a statement of financial position, which I say it shows the net worth of the company. The net worth of the company, it's just your accounting equation, your assets minus your liabilities. And under assets, we have current and non-current. Under liabilities, we have current and non-current. And what's left will be owner's equity, which is shareholders' equity plus retained, which is made up of ordinary share capital and retained income. So far I've told you about the statement of profit or loss, the statement of financial position, and the statement of cash flow, which shows about the cash flow of the business. It's either money is coming in or it's going out. And that's where they stop. And there's 5 of them. So they end up losing marks because they don't mention the other 2. So the other 2 will be the director's report. And that's where the directors report on the financial affairs and how far the company has come and then we have auditors report that state whether the financials are fairly presented according to the applicable accounting standard and if everything was true, fair, and they just provide a reasonable assurance about the financial affairs of the company. And obviously, after doing everything, they will come up with what we call an audit opinion. And there's 3 types of audit opinions. We'll talk about that later on. So those will be your financial statements. Now, all your financial statements, they must be prepared in accordance with an accounting standard, which we call IFRS. It stands for International Financial Reporting Standard. So everything that is in your financial statement must be fairly presented. Okay, it must fairly present the business of the company and explain the transactions through the notes if possible and the financial position of the company. It must show the company's assets, liabilities, equity. There they're talking about the statement of financial position as well as income and expenses. There they're talking about the statement of profit or loss. Bear in on the first page of the statements a prominent notice indicating whether the statements have been audited or not. Note that when you say financial statements have been audited, it means they have been checked by an external party which is unbiased. So you can rely on that information. If it's not audited, you can't honestly rely on it because then income, expenses, assets, liabilities, owner's equity can be misrepresented. So audited ones are the reliable ones. Any financial statements prepared may not be misleading or false. And the people that are assigned with this duty to make sure that the financial statements are, are not misleading and false, they collude with those companies. I know that IBAM, which is Independent Regulatory Board of Auditors, have come up with a rule that auditors need to rotate. It's been there, but it was never applied. And I don't know if it will work. And they'll talk, auditors will lie and tell you that what they do is unbiased. But think about it, guys. If I pay you 100 million rand to come up with an audit opinion, are you really going to be fair and unbiased? No, you get most of your income from me. That's highly questionable, but I don't know how they're going to do that. It hasn't worked so far because all the businesses that were found to be uh, corrupt, that were not fairly presenting their financial affairs, auditors were involved. Talking about KPMG, we're talking about Deloitte. We're talking about when we talk about Deloitte and PwC, when you go overseas, they're still facing the same scandals. So as much as we say audited financial statements are fairly presented, and they are not misleading and they are not false, the thing is, the auditors do work with the directors to manipulate these financial statements. And these are called annual financial statement because they must be reported over 12-month period. So these statements are your auditor's report, director's report, statement of profit or loss, statement of financial position, and statement of cash flow. And then they include the notes as well that will explain the values that are reflected in this statement. So any other relevant information will be included. I know one of the information that is very, very important, even though it's not in a part of your financial statement, it's what we call sustainable, whatever. It's all about the environment. Okay. What do they call it? CSI or CIS? Yes. It's all about the social responsibility and the environment. Um, More than anything, it's all about the environment. And a lot of companies were penalized. And to the certain extent, you need to show that information in your financial statements where you state how you, as a company, what you have done to protect the environment so that the upcoming young guys can also enjoy planet Earth. I know that one of the companies that were guilty of violating environmental laws, it's VW. They were penalized. They had a very hefty penalty. But now most companies, I know that most companies in in Germany and Europe in the next 5 years will not be allowed to manufacture any car that is not electric. I don't know how that will help the environment. Um, But I don't think it will because electricity is generated from other harmful products as well, like coal, which pollutes, I think, more than um, petrol and diesel. Well, I'm just saying, and this is not confirmed from just from what I've read. So it still needs to be verified. Anyway, because if they're gonna get rid of petrol and diesel, they need to check if that electricity was produced when the production of that electricity was not harmful in the first place, because it could be more harmful than petrol and diesel. So they need to check how it will be produced. I think the most uh what can I put it? Reliable way of producing electricity is wind turbines, natural way, um, instead of coal. But anyway, Um, that statement must be included with the other statements. Okay, so we can say now there are six financial statements, but for your exam, please remember only those five. Okay, but to sound smart, just include the one that talks about the environment and how the company has contributed to the society. I mean, not long ago, we were celebrating, not really celebrating, commemorating 12 years since Marikana massacre, where the striking miners were complaining about the living conditions. And when you look at the living conditions in areas surrounded by mines, they're really, really bad. People there are suffering, but people that are responsible for running those companies are staying in Cape Town. Some of them are staying in England. Some of them are staying in America. The Oppenheimer family, I think they all stay in America, except for the original guy who stays here in Joburg. I think is in Parktown or something. Um, Everyone else is living lavish lifestyle, but they're taking resources and they're living the communities around the areas where they mine in bad, bad situations. Um, well, I'm from Boki. Boki is also not far from the mines. Um, South Deep has tried to do something, but some mines don't do anything. I feel like communities around mines should actually be looking good. They should have resources, um, tennis courts, nice roads, and so on. But that's not happening because billions are made from those mines. But the communities that stay next to these mines don't even get employed, which is very interesting. Anyway, so all that report, as I said, it must be shown as part of your financial statement. But most companies are required to do that, but it's not a a legal requirement. So I don't know if it's a legal requirement, um, but it's not legally binding yet. But it should be binding. All companies need to show that report as to what they have done for the environment and the communities that are staying around where they run businesses. Anyway, um, now one of the things that we need to talk about is authorization of shares. And if you watch my videos on shares and dividends, I explained what authorized shares are. This is just the maximum number of shares that a company can issue. Now, there are different classes of shares. You guys only know ordinary share capital or ordinary shares, but we have preference shares as well. But for now, grade 12 will only talk about ordinary shares, which gives you the voting right. So if you hold ordinary shares, you have a voting right, unless there are rules specified in the Memorandum of Incorporation that doesn't give you such right. Note that the board may increase or decrease the number of authorized shares at any point in time, but for grade 12 purposes and lower grades as well, note that um, your authorized shares may not change. And note that you may not have issued shares being more than authorized shares. Now, issued shares are just authorized shares that have been sold. It's like when you buy stock, it's trading stock, but when you sell it, it becomes cost of sales. It's the same scenario. So you can't sell what you don't have. So authorized shares is just the number of shares that we are willing to issue. They're just there. We haven't issued them. We haven't made money from them. The only way we can make money from them is by selling them. And when we sell them, we say we have issued them. And everything must be according to the memorandum of incorporation as well. Now, note that if shares that were issued were not authorized, this can be corrected in the next meeting. It can be corrected retrospectively. Okay. However, for grade 12 purposes, as I've said, authorized shares will always be greater than issued share. You got that? Now, I asked one of my students that I met through this YouTube channel, Unati, and I asked her, when you are a shareholder, you go and buy shares in this company. Why though? Would you just go and buy shares in a company for the sake of being a shareholder? And there's this thing that students believe that when you bought shares and you're a shareholder of a company, the profits of the company belong to you. And according to this, you have noticed that the profits of the company don't belong to you. They belong to the company. So they are not yours. So since the profits can't be yours, why would you go and buy shares in a company? Just to be a shareholder? And I've always said to my students, try not to be a director. A lot of students fight to be directors. Directors are just running businesses to generate profits for the business. They must fight to be the owners of those companies, meaning that shareholders should make more money than directors. But how are they making money? As a shareholder, when you invest your money into this company, what are you benefiting? You can't just put your money there without getting something back. What are you getting back? And that's where a lot of students seem not to know what they're getting back if you're a shareholder. Guys, when you are a shareholder, you get dividends. This is the return for your investment in the company. And immediately when the company declares dividends, that becomes an obligation for the company that they need to pay. It becomes a current liability that must be paid within the next 12 months. And there are certain requirements that needs to be satisfied before a company can declare dividends. And we call a solvency and liquidity ratio. The company must be able to meet its short-term liabilities and long-term liabilities immediately and before, immediately after and before declaring those dividends. Remember the authorized shares, where issued shares are more than authorized shares, that can be corrected. Or if the company wants to increase the number of authorized shares, it can correct it during the shareholders meeting. So every public company must convene an annual general meeting. We call it an AGM of its shareholders once every calendar year. And that is where most of the time the directors will go to the AGM to report on how the business has done. A meeting convened must at minimum, okay, provide for the following business to be transacted. So we can talk about the shares. Are we issuing more shares? Are we appointing new directors? Are we changing the auditors? Do we have an audit committee? So on and so forth. So I have already spoken about these ones here. So that's where we're going to have the directors reporting, and they will report, and the report will involve the financial statements, the audited financial statements. That's where they'll decide if they elect directors, they appoint a new auditor, audit committee, or any other matter raised by a shareholder. Now, I've been talking a lot about the board, directors, and prescribed officers. Let me read this one out. The business and affairs of a company must be managed by or under the direction of its board, which has the authority to exercise all the powers and perform any of the functions of the company, except to the extent that this act or the company's memorandum of incorporation provides other. So when we talk about the board, who exactly are we talking about? So as I've said, guys, that is just straightforward. So the board, they're just responsible for managing the company. That's it. But who is part of the board? It's normally at least one director in the case of a private company or a personal liability company, and it must be at least three directors in the case of a public or a non-profit company. Now, the election of directors, I've said, is done at the annual general meeting, right? So directors are elected through a series of votes by the shareholders with voting rights. Now, that's where, as a director, you become the eyes, the ears, the mouth, the hands, the legs, the arms of the company. So you can't act in the best interest of the shareholders, but the shareholders are the ones that appoint you. This feels a little bit tricky, don't you think? Are you, as a director, really acting in the best interest of the company, or are you acting in the best interest of the shareholders? And know that if you don't generate enough profits for the company, the shareholders will fire you. That's how your performance is measured. And that's why I asked myself, what was happening at Steinhoff annual general meetings? Talking about Steinhoff, one guy that I respect, Theo Baloyi, um, who is the founder of Batik Shoes. So obviously, it's either he's a director or he's got other people running this company for him, right? Now, what makes you qualify to be a director of a company? And this is one of the things that Marcus used there and Tutoring and all the delinquent directors we have. Apparently, there's a register of delinquent directors somewhere out there that they failed to abide for. And these are just simple rules of what characteristics you need to have as a director. I normally say to my students, if you call yourself a player or a birdie or whatever it is, maybe you should consider not being a director. Because one of the characteristics of being a director is that you need to be loyal and you must always act in the best interest of the company, not anybody. So faithfulness is vital in being a director. And if you don't practice this whilst you're young, what are the chances that you will be a good director? Chances are that you'll be a delinquent one. So you can be eligible to act as a director if you are an unemancipated minor or is under a similar legal disability. So basically, if you're still young, you can't be a director, guys. Sorry. Less than 18, less than 21, nah. Well, less than 18, let me just put it that way. Or the court has prohibited you from being a director, or you are insolvent on your personal capacity, your liabilities are more than your assets, you can be a director, or you have been removed from the office of trust on the grounds of misconduct involving dishonesty. See, honesty. You practice this while you're still young. Has been convicted of theft, fraud, forgery, perjury, or an offense. You can't be a director or does not satisfy any qualifications set out in the memorandum of incorporation. For instance, to be a financial director, you need to at least have a financial qualification. So if you don't have it, you can't be a director. But I know for sure there are companies out there whose financial officer doesn't even have a financial background. Some don't even have post-matric. Yeah. Talking about this, when everyone was going after Angie Mutsecha, who has a master's, they were talking about how she moved from education to defense and what is she going to bring there? She doesn't qualify to be there. And I'm like, okay, in this list of ministers, there are three men. Men. They are taking one woman with a master's. Master's. Yeah? A master's in education. It doesn't matter whether it's a master's in education, but there are three men in that list of ministers who only have matric, and no one questioned them. Happy Women's Month. Okay, what will qualify you to be removed as a director? Obviously, that will be based on the number of votes. And that's the thing with Steinhoff. They kept on voting for Marcus Eustace to be a director. And no one saw anything wrong with the guy. So so people every year they kept on voting for Marcus Eustace to stay there for 20 years, if I'm not mistaken, right? Please go and check Steinhoff. I watched it long time ago. I kind of like forgot about it. Now, the standard of director's conduct. The director of a company, when acting in that capacity, must exercise powers and perform functions of a director in good faith and in the best interest of the company with degree of degree of care, skill, diligence, and may be reasonably expected of a person carrying out the same functions in relation to the company as those carried out by the director and having general knowledge, skill, and experience of that director. So that's what I said. You can't be, I always see this as a minister. Minister of Education doesn't have PhD. Minister of Finance doesn't have a finance qualification. Minister of Health, now he's a doctor, but before they didn't, they were Minister of Health that don't have that are not. And there's this thing that, yeah, just because you have qualification doesn't mean that you know what you do actually. Then why do we encourage students to go to school? You do. How can you be the Minister of Finance if you don't know what income is, what expenses are, what assets are? How? You can't. How can you be the Minister of Justice if you don't know the law? Do you understand what I'm saying? So you need to be qualified to hold these positions. And people that are qualified and holding these positions, they use their knowledge to manipulate the financials. Like Marcus used them. He is a chartered accountant. And there are a lot of, I forgot this Singh guy, this Singh who was, I know his name is Singh, Singh, who was the financial CFO for ESCOM. He's also one of those guys that were removed from, they're considered to be delinquent directors as well, because they violated these conducts of being a good director. Now, if you fail to be a good director because you violated this conduct, you as a director can personally be held liable for all the losses and damages or caused due to you failing to perform your duties. Another lady that is, yeah. This one, because my friends are chartered accountants. When they don't do their job well, I normally call them by this lady's name, Quinana. Quinana. She was a chartered accountant. Yeah, I've never seen such a, yeah, damn chartered accountant. Yeah. And you ask yourself, how do people get this qualification? And it's one of the hardest. It's very, very difficult to qualify. I mean, I'm a dropout, you know. So that shows you how difficult it is. But then you get to have chartered accountants like Queen Anna. And you ask yourself, how? How did she pass all the board exams? And how did she become a director of some of the biggest companies? Interesting, isn't it? Anyway, this is what I was talking about here. And some of the delinquent directors that I can think of are these two. And they are late. One of my former students who is studying BCom at Stellenbosch said that when it comes to Marcus Houston, we want to see the cops. We want to see it. We want to see the body before we can say he's gone. Because there are rumors that he's chilling somewhere in an island where extradition treaties don't apply and he's just enjoying himself there with there's this guy that passed away, apparently passed away, who was also involved in corruption. I forgot his name, but he's also one of those guys because he was driving an X5. So that day he decided to leave his X5 in the office and drove with a Corolla and somehow got involved in an accident. So that didn't make sense. Forgot his name. And he passed away. But people are like, now we want to see the body first before we can say they passed away because probably they're chilling somewhere in an island with Marcus Eustace sipping cocktails. Marcus Eustace in Steinhoff, he seems to be liking blondies, so he's probably chilling there with the blondies, just like he did at Stellenbosch. Yeah, man, it's ridiculous what these guys do. In their position to be objectifying women like that. Yeah, that's all I can say about delinquent directors. There's a lot of them. It's when you have failed to abide according to what you need to abide to when you are a director. And Dumiani was in charge of SAA. There were corruption there. She's got ties with Jacob Zuma as well. Hey, there's a lot going on in South Africa. It's like the financial sector is just a movie. Companies, just a movie in South Africa. Auditing firms, KPMG, Deloitte, the PwC is also involved there. It's just scandal after scandal. It's like a movie. And I must say that if you are an auditor or a CA to be, you must be living in good times because, yeah, this will make you the best accountant ever. That's why chartered accountants in South Africa is considered to be the best. This is what we'll be talking about in the next video. We'll be talking about auditors, external auditors, and their duties. An internal auditor, remember, is responsible for making sure that internal controls are strong. What are these internal controls? Internal controls are simply safeguards that you put in place to prevent corruption and fraud from happening. But now, those controls will be tested by an external auditor who at the end must issue an audit opinion, which it can be in a form of it can be a qualified opinion, unqualified opinion, or a disclaimer. Okay, check out the next video we talk about as we talk more about that.